Nischal Maheshwari, EVP Research with Edelweiss Securities joins us live. Nischal, good morning and good to have you back. Nischal, visibly everyone is really worried about Ukraine as the standoff between Russia and Ukraine continues. From India's perspective, how important is that? How important this geopolitical development?
Morning, Nikunj. I think Ukraine, as far as the development in Ukraine is concerned, I think there is one big thing which can influence India, and that is the oil imports. Because of the oil imports, you will start having problem on the currency also. So I think any geopolitical thing which happens across the world, the biggest influence it creates is basically on the oil side. And we have seen across the world basically that all the commodities have appreciated. But what impacts us the most is oil, and oil has already started going up. So that is what is going to actually create a bigger problem for us. So it creates current account deficit, rupee depreciated, rupee creates inflation again. So the whole cycle starts off.
So assuming the worst case scenario, Nischal, and of course a big event like the elections as well being a big overhang for our markets in any case, what's the sense that you're getting? Do we see weakness in the market, or do you think we're going to continue to be range bound as has been the case here to date?
See, it will remain range bound for the reason that you do not have a very strong clarity as far as the elections are also concerned. What is going to be the clear outcome? I think still it is till the final day comes out, basically you are not sure, and that's why people were anyway hesitant to take a overweight position on India. In that kind of a situation, if you have some concerns coming as far as the geopolitical situation in the world is concerned, I think there would be pressure on the market.
Nischal, even though election will be the big defining moment for Indian markets, what explains the underlying interest in Indian equities? Off late flows are positive, and whatever we've lost in the first 6 or 7 weeks of trade, we pretty much have managed to regain that.
Definitely, Nikunj. I think as more and more people were coming to India during the last month of conferences, basically people were getting a handle about what's really going to be the outcome, most likely outcome of the politics. So from an underweight position, what most of the people were holding on in the last 6 months, they have started becoming equivalent weight on India, so that they do not get caught with the underweight position when really the big movement happens in India post the election. So that's why I think you have seen positive flows coming in. But going ahead from here to becoming overweight on India, I think people will wait to see the outcome. And secondly, if there is a geopolitical situation, then some people will definitely start looking at maybe exiting, and that's largely going to happen on the emerging market side, not India alone.
The point that you were making as to how the market will continue to be range bound in the run up to the elections, do you think the upside of the market though could be capped around pretty much where we are at currently, around 6,300, 6,250 sort of levels?
Yes, I think so. It looks difficult that market is going to break out of the previous high. And until unless we get a very strong clarity as far as the coming election is concerned. So I think that way the market seems to be fairly poised.
Nischal, but a lot of individual small groups are trending up very smartly. Auto ancillary, seed companies, mid-cap IT. So what do you make of price action in some of these individual groups? At a time when institutional activity is slightly limited and restricted, retail presence is not there. What explains the price action in small and mid-cap stocks?
Definitely, Nikunj. I think what is really happening is, as you see the various class of assets in the market, basically you are not making money in gold. Your real estate is not a very lucrative position or where you would like to invest. The only two avenues left is basically either you go into tax-free bonds or equity. So I think equity is looking attractive, and especially from the HNI perspective. And I think that's where you are seeing the mid-cap groups basically and the mid-cap stocks getting accumulated by the HNI groups. And that's why you are seeing that the spurt in both in volumes and prices happen very, very strongly when some of the mid-cap stocks are basically start getting accumulated by the HNI groups. I think the institution side also, you have started seeing that some of the mid-caps, especially the domestic mutual funds, have started accumulating. In the month of December, you had seen a few funds basically which got raised, especially around mid-caps, and they raised close to around 1,000 to 1,500 crores. So that all money also has got deployed in the last 6 weeks.
But Nischal, just getting back to the point that you were earlier making, and we've been seeing some uptick coming in terms of FI activity and inflows coming in. But what's the reality on ground? Are these fresh allocations? Is it long only money coming in? Or do you think they are just having a very, wait on the sidelines, neutral sort of approach till the elections?
So definitely this is long only money. I don't see the excitement as yet coming from the hedge funds, and obviously the number of hedge funds which we used to have in the late 8 and 08, 09, those numbers are not there anyway. So hedge fund money is still not big. It's a long only money which was sitting on the side on an underweight kind of a position. I think that money is actually started coming to India. And that money is actually now gone from underweight to neutral. So that's why you are seeing that this is a pretty stable money basically which is coming into the country.
So what is that money chasing? Is it chasing the, said outperformers, the likes of IT, pharma, or do you think it's into the dark horses, the banks, capital goods, which when the economy recovers could do well?
I think still IT and pharma are their favorites. There is no doubt about it. We have seen a marked fall in interest as far as FMCG stocks are concerned. So consumption is not strong with them. They are selectively looking at industrial stocks, banks, but very, very selectively, and some mid caps also.
Where is Maruti? 30 rupees approximately down for Maruti. Nischal, there is serious issue about Maruti and the kind of corporate governance standard that company is following. So if the issue is serious, what explains the fact that for Maruti, the FI limit has hit 22%? The fact that the FI limit has hit 22%, that explains that institutional investors are still interested in buying into Maruti.
It's a very interesting situation, Nikunj. I totally take your point, and we have been also very negative about that this is a third instance where Maruti is not showing concern for the minority shareholders. And but simultaneously what has happened is Maruti has underperformed for the last 2 years as far as its performance is concerned, and in the next 2 to 3 years the numbers are going to be pretty strong. So there is going to be recovery in the four-wheelers in FY15 and 16 on the back of economic recovery as well as possible interest rate cuts as and when it happens. And that's why the numbers are going to be pretty strong for Maruti. And I think given that you do not have other plays, especially on the four-wheeler side, given that Tata Motors is largely a CV play in India and a foreign play as far as car is concerned, the interest on Maruti continues to be there. So that's why you're not seen after this third episode also Maruti falling dramatically.
Dr. Reddy down 41, Glenmark down 10, and Ranbaxy is down 1. Now what do these three pharma companies have in common? Well, they have exposure to Russia and the CIS countries. Nischal, have you done some number on what is Dr. Reddy's total revenue or total profit which is coming from the CIS region?
I do not have numbers offhand actually, Nikunj, with me, but there is definitely a large, smallish portion, somewhere around 10 to 12% revenue is coming from both Ukraine as well as Russia.
So would you be keeping Dr. Reddy on your watch list now because of the geopolitical problem, or you think these political problems, the geopolitical problems are short-lived? If Dr. Reddy declines, it's good time to buy it?
Yes, so if the geopolitical problems are short-lived, basically it gets over in next 1 or 2 weeks, or at most for a month, I wouldn't be really bothered about, because the influence on Dr. Reddy's earnings would be at max 2 to 3%. But if it gets prolonged, then I would be worried basically, because then 10 to 12% of the business is coming from that territory. That might have a larger impact on it. But having said that, I think Dr. Reddy is doing extremely well in its large market, which is US, has got a very strong pipeline out there. Domestically also they are doing pretty well. So those are actually the growth drivers for Dr. Reddy. So yes, Ukraine and Russia are markets for them, but
okay, Hindalco 107. This is one metal stock which has moved independently of what Tata Steel and other ferrous stocks have done. Nischal, is there a reason why Hindalco is outperforming Tata Steel, or for that matter any other ferrous stocks?
I don't see any reason for it to outperform, given that the non-ferrous metals is still weaker than the ferrous side internationally. Except for that, they have got a recently some approvals coming as far as their greenfield project is concerned. There has been one mine which has got recently the approvals have come to them for the bauxite reserve as well as the coal, and that is possibly what is driving the prices up. Otherwise also, valuation wise, it is pretty interesting and attractive. So I think some amount of bottom fishing may be happening in the stock.
Nischal, you've talked about, accumulating capital goods stocks like Voltas and L&T. What's the rationale behind that?
So both these cases, basically we are seeing that the execution is improving on the ground. So both of them basically have a very strong order book. So whether it was Larsen or Voltas, both of them have a strong order book. Larsen in the domestic market, Voltas in the Southeast Asian, in the Asian, West Asian market, so Saudi Arabia and all that. So both of them have a strong order book. What we have been lacking with them was the execution. So last 2 quarters we have seen execution improving, and on the back of the execution improving, basically we have seen that the margins have also started improving for both of them. They have shown for 2 quarters now improving margins. Management, when you speak to them, is been indicating that the margins will continue to improve further up from here. So in that kind of a scenario, I think valuations were pretty cheap, and stock has started showing sort of a fair value.
Right. Nischal, so if you have to, let's say, construct a portfolio irrespective of the election outcome, which are the 3 stocks you would like to buy in that portfolio? I'll keep the market cap and the liquidity criteria open.
So, Nikunj, interestingly, obviously one of their stock would be in IT, and I like persistent systems out there. But I've been of late watching a lot of these PSU stocks, which is just getting decimated in the market. And I'm not talking about banks. I'm talking about something like an NTPC, something like valuations are like way bad basically for them. NMDC and NTPC, and each of these guys have a huge amount of cash on their books. That cash is not going away, and the market is just throwing the stocks away. So I like an NTPC in my portfolio at this moment. I would like, I told you about persistent, and the third stock what I would have is basically CARE. Another, I wouldn't say government stock, but largely owned by the PSU banks, but a very influential player as far as the rating agency is concerned. And it is available 50% cheaper than the other 2 peers. Just because it doesn't have a foreign pedigree, basically, that's why the stock is cheaper by 50%, but margins are far better than both the other guys. And it is the second largest player as far as the ratings is concerned. So ahead of ICRA also. So I think these are my top 3 picks for the moment.
Nischal, you've also talked about, I mean, besides Persistent Systems, of course, you've also talked about, Mindtree and Hexaware as well. What's the stance when it comes to the blue chip IT names? Is it now ceiling hit? Is there no money to be made when it comes to the large cap boys?
Is that question for me?
That's right.
So yeah, large caps, definitely. I think large caps, my preferences still remain to be Infosys and Tech Mahindra in that order, and then TCS. So no doubt, but see what's happened, the whole IT sector has definitely outperformed and done pretty well in the last 1.5 quarters. Now going ahead, you have to look at it saying that 30-40% growth can come from where is, I think, smaller names but very, very focused names. So something like Persistent, which is big on digital technology, which is the future of the whole IT pack. That's where I would like to put my money in. And similarly, Tech Mahindra also has indicated in its various forums that 25% of the business by 2016 would be coming from digital technology. So that's where I'm putting my money in.
Okay, Nischal, good chatting with you. Really appreciate you taking the time out and speaking with us today. Good to have you in the show today.